Joining me now, Portfolio Wealth Advisors President and CIO Lee Munson. Lee, I want to get your reaction to the China-U.S. talks because these are different than the EU talks or any other talks that we're having because, Japan's investing in the United States. The EU has agreed to invest in the United States. And we really don't want China to invest in the United States. We don't want them buying up our land. We're disputing TikTok right now. So do you think this is part of the holdup with the negotiations? And where do you see us landing with China?
Well, it's a big issue. We've never had an economic trade partner like this. It's also a military adversary. I think that China is the most difficult tariff to get through. I think that that's what's holding back some parts of the economy and some stocks here in the United States. But we're like it's like a couple that wants to get divorced for good reasons, but people don't want to be poor afterwards. I think with China, the first thing is, what are we going to do with the chips? And I think there's a lot of people that are watching that very closely. But secondly, I don't think that we're going to get anything other than the trade that we have. Are we going to be able to do trade with China over the next few years and not get embargoes or not get the rare earths, the things that we need for magnets, the things that we need to really scale up artificial intelligence in that trade? So what I'm looking for as an investor, do we have just the bare minimum to get raw materials to help our industrial production as that relates to the artificial intelligence theme right now? Outside of that, I don't think there's much more than you can hope for other than no trade embargo.
Yeah, Mike Lee, there's more because, you've got NVIDIA, the export of NVIDIA chips as well. So there's a lot, in the fentanyl trafficking. The materials are sending to Mexico where the fentanyl labs are or were.
Yeah, I think they're taking the right approach with this, is that China's going to be a competitor in AI, so we might as well profit from it too. And what you see is the NVIDIA chips that are 2 and 3 generations ago that are nowhere near as fast as the chips that they're coming out with today, 1/20th of the speed, 1/10th of the speed. But it seems to me that this is something that's going to be sorted out, and earnings are probably going to be much better than expected, as we've seen so far. And the hedge fund community is completely underinvested because of all the margin calls they got after the tariff tantrum. So, Lee, I was reading your notes. It seems like you're very bullish. I'm very bullish. What exactly do you think is the best place right now?
Well, let's think about it, right? We went from the big buy the dip from Liberation Day, which was just so obvious. You could go in, you could buy the NASDAQ, you buy the S&P. But where's the catch-up trade right now, right? I'm not looking at buying meme stocks. Look at what we had in what we call the Trump basket versus that bro billionaire trade. If you go back to November 5th, election day, you look at small cap value. You look at banks, tanks, cranks, shanks. You look at things that are supposed to have really flourished with Trump deregulating and cutting taxes. They're basically flat over the last, since November. They haven't really moved. Now, I believe some of that is just the concerns about tariffs. The market wants clarity on some of those things. If you're a smaller industrial manufacturer, these things matter. You want to know what your deals with China are going to be. But once we get past that, then you're going to have this huge overhang, and people are going to look around and say, sometimes I care about valuations. And when you look at the amount of rampant speculation that's going on, the bullishness, I love the bullishness, but there's a point. I'd really look to the things that we thought back in November were going to do well. And when you look at down 5, down 10%, or just down flat, I think that's the next rotation you're going to see between now and the end of the year, because those are earnings you can really eat. And let's just put it this way. I can't live just on hyperscalers alone. The market can't just be $350 billion in CapEx spending. That's a great story, but there's other fruit out there, and I think people are going to start to look at it very seriously as we get into the fall.
I thought you were going to say diversify there, Lee. Let's talk about yields right now, because the Fed, of course, is kicking off the 2-day policy meeting this morning. The bank expected to, hold rates steady, but President Trump has been ramping up his pressure on Jay Powell. Cut rates after last week's confrontation during the tour of the Fed's $2.5 billion headquarter renovation. So Wall Street expects the Fed to defy the president once again, with no move until likely September. But investors are looking for a fresh round of econ data. And one of those is going to be Friday's jobs report. We've also got June JOLTS. That's 10 a.m. Eastern time today. June ADP coming out tomorrow. That's 78,000 private sector jobs, Lee. So, that Friday jobs report, we had a guest on yesterday that said that could be really the one to watch, and that could maybe move or change the Fed's inclination for what to do in September.
I think the Fed is going to dig in their heels. While I certainly look at what bond markets are pricing in, I actually have concerns the Fed's not even going to do anything in September. Listen, unemployment's fine right now. Inflation's under control. I mean, we've been talking all morning that, we might get a one-time bump from the tariffs, but I don't think that's going to be enough to move Jay Powell. So I think really I'm not in the majority here. I don't think we're going to see any real cuts outside of maybe a token quarter until next year when Jay Powell is out and Trump installs a new Fed chairman. And I think that markets are going to have to temper those expectations of cuts. And also, we don't have a lot of restrictive monetary policy. You look at companies like D.H. Horton a couple weeks ago with earnings, it was through the roof. We don't really need Fed cuts right now between now and next year in order to have this market go higher.
Interesting. Okay, well, we shall see. That commentary, of course, is going to be key tomorrow. Lee Munson, thank you for being here. Appreciate it.
Thank you.